Hey guys, Corey here. Welcome back to the channel. Today, I want to talk about a very important strategy. In fact, the most important strategy that you can implement into your portfolio, and that is selling puts. Let's say you want to get into a stock. Today, we're going to use NIO as an example. NIO, in my opinion, has hit an absolute bottom. If you want to see the full analysis and technical overview and financials of NIO, I'm going to put the link right there on the top of the screen to go watch that complete video. However, this video is just about selling puts and with NIO as an example. So instead of just buying a stock outright and then the stock drops 10, 20 cents, 30 cents or more and you're out $30, what if I told you you could get paid? That's right. You could get paid to enter the stock and buy it. It's like people just offering you free money. Like, who doesn't want free money? It's like you're sitting there thinking, should I buy this stock right about now? Should I buy it? Oh, thanks. I'll take your money to enter the stock. No problem. Getting paid to buy stocks. I'm buying stocks with other people's money. Such a great feeling. I'll take more money. Come on, give it up. Thank you. Man, just going to keep buying stocks with other people's money. This is great. But all joking aside, I want to show you how you can sell puts to get into the stock of your choice. Now, just as a reminder, I'm no financial advisor, and this is not financial advice. It is up to you which stocks you want to buy and how much money you would like to put into them. I am just here to guide you and coach you on strategies, technical, fundamental analysis, news, and different types of strategies you can implement into your portfolio. Now, I do want to point out something very important, and that is selling puts is the safest strategy that you can possibly implement into your portfolio. And what I mean is, if you were to sell a put credit spread, and let's say the stock falls below your strike price, you would have to close it and buy it back for a loss. Now, with a put that you're selling, if the stock price falls below, then you get to buy the underlying asset at the strike price that you choose. You chose the strike price of the put, and then you get to buy the stock you already wanted to buy, but you're getting a discount by collecting a premium. So there's not really a downside to any of this. You're just pretty much getting to buy the stock you already wanted. So if you really think about that, so if you're selling a put credit spread on the stock of your choice, and the stock falls below the strike price by, let's say, $1, you could lose $100 to $200 easy, maybe even $300. Whereas with the put that you sold, the worst case scenario is you get to collect the juicy premium and you get to buy the stock that you already wanted to buy. So there's no downside to this. It's like the perfect way, because the worst case scenario, you buy the stock that you already wanted to buy and you get to buy it at the strike price that you chose. You choose the stock. You choose the strike price, you collect the premium, and worst case, you buy the stock at a discount. It is very low risk, especially if you do it on high quality stocks. It's one of my favorite strategies, and it makes me smile all day long because there is nothing better than knowing that I'm picking my favorite stocks and I'm selling puts on them, collecting juicy premium. And if I get assigned, I get to own the stock I already wanted at a discount. There's like no stress. My way of trading is safe, low stress, and consistent returns. So I'm going to show you guys an example of how to sell puts, and I'm going to do this example on NIO, and maybe we'll go through another example on a different stock like Upstart, SoFi, and I'll be doing future videos on puts and how to do this. Okay, let's go ahead and take a look at NIO. Disregard my purple bar here. I just use that so this way I know where expiration date is for selling options. And you can see that there was a rock bottom. Now you can see there was a really good support here on NIO at the $5 mark. However, it broke through $5 due to all this negative news in the EV sector. You got to understand that a lot of the negative sentiment towards NIO is the fact that they're Chinese. And even more importantly, that Tesla has had a lot of bad news lately. And not only that, the EV sector has been suffering as a whole, not just NIO. So NIO's broke through that. However, it's found pretty good support around 450. I really feel that this is the bottom. NIO has an all-time bargain bottom right now. And if I was to go over this technical analysis and the EV sector sentiment, I would say that as a whole, NIO is most likely going to end up working its way back up this way. You can see if I do the trend line right there and we draw another line right here, And based on volume, you can see there's not a lot of selling volume. There's a lot of big buying going on, yet the price is still down. Why is this? How is it possible that we could have these big green candles everywhere and all these little red ones consistently holding it down? Well, look at this. We found consistency right here for the past week and a half at the $4.50 mark. Also pretty good stability at the $5 mark. Also the same at the $5 mark. So if we look at this and I draw a trend line down here on the 1 hour chart, you can see that we got a bear flag right here. And so this is either going to drop off or we're going to have a little bit of a breakout. And I don't see this going any lower. So if I was a betting man, I would say that we're going to see something like this. Like NIO is going to slowly work its way up here and then reject back down, maybe like this. And we're going to see it kind of work its way up to the $5, $6 range. And most likely in the next 3 to 4 months. The 1 year price target is $7.10. So if you get in now, just based on the technicals, you could double your money. But this video isn't about the technicals or the financials of NIO. This video is about selling puts on your favorite stock. So here we are on NIO. Very popular stock. A lot of people love NIO. I love NIO. And I'm looking to get back in. So we're going to go ahead and trade NIO options. We're going to go to next week. Remember, this strategy works no matter when you see it in the future. Just change your expiration date. We're going to go to sell, put, and then we're going to pick a strike price. And we really don't have a lot of options here. If we sell a $4 put, we're only going to make about $4. We can do that. The delta is 14. Highly unlikely to happen. I don't see NIO dropping to $4. I really don't. Because there we go. We can buy a share of NIO right here, $4. Of course, we want 100 shares. What are we going to do with 1 share anyway? You know, but I'm just saying, it's $4 a share that you'd be, assigned at if it happened, but you're only collecting $4. Highly unlikely to happen. So I will not sell that. I suggest selling the 450 put because I anticipate wanting to get into NIO right at the price that it's at right now. I mean, you can't go wrong getting in NIO right now. It's $4.50. So if you sell a 450 put, click continue. You could really try to aim for 20 or even 19. Let's say 19 because it's in the middle. That means your break-even price is 431 and NIO's at 450, which means NIO would have to drop another 19 cents by next week just for you to break even. And even if it did, you're now in the stock, or you can roll the option another week. Remember, extrinsic value. No one is going to assign you if there's extrinsic value. So let's say that you get to next Friday and NIO's at 431. You're at break even. You're going to get assigned. You can just roll it for another $19 credit to the following week. So now your break even is no longer 431. It's actually 412. Because now every $19 you collect or $18 you collect, it adds onto the total. So now NIO would have to drop to $4.12 for you to break even. If it doesn't do that, you're ahead of the game. You can keep rolling or you can get assigned. If you really want to get aggressive, you could sell the $5 put, which to be honest, I probably would because I can collect $54, actually $56, which makes my break even $4.44, which is $6, $7 above where it's at right now. And if NIO was to go up above $5 in the next week, which is possible, I wouldn't get assigned and I'd get to keep $54. Or if we're feeling bullish that NIO's actually going to close next week at about 450 to 470, it's fine to sell a $5 put because then our break-even price is 444. And if NIO closes at 470, we're $30 ahead. Whereas if we sell the 450 put, and NIO goes up to 450, 470, then we're not going to get assigned and we get to keep $18. That's also fine. But if we truly want the stock, which I do, and I'm sure you guys too, and I'm excited because I really want the stock, then selling the 450 put for $18 is cool. So selling the 450 put is awesome. Juicy premium of $18. However, if we feel the stock is bullish and is going to go above 450 for next week, and we don't want to avoid being assigned, we want to be assigned for sure, then we just go ahead and we sell the $5 put because that's going to put us below 450 anyway. And NIO is already above 450 right now. It's like right at 451. So if it stays above, then we basically are allowing ourselves to get assigned, but we're collecting more premium. So it really is up to you guys. If you think it's bullish and you want to get assigned, sell the $5 one. If you don't, and you don't really want to get assigned yet, and you just want to start collecting premium every week, the 450 is awesome. And you could even go as low as $4 and just collect $4 a week. If you have a small portfolio of only $400 and you don't want to get assigned just yet, you just go ahead and sell the $4 one every week. And the chances of this happening, very low. The delta is 14. The 450 is 47. Now, once you get in to NIO, that's where the fun begins. Because your average stockholder will just hold the stock. He'll do nothing. He'll just sit back and relax and, I'm going to check NIO in a month and see if I made or lost any money. Oh, NIO's down. So the stock investor holds NIO and he waits for it to go up. So the stock investor just holds NIO. And if it goes down, he loses money. If it goes up, he makes money. Whereas you, the options trader, if it goes up, you make money. If it stays the same, you make money. If it goes down, unlike the stock trader and the stock investor, you make money. That's right. You make money no matter what the stock does. Because once you're in, you're going to go ahead and sell calls. So let's say you get put at 450 and NIO's at 450. You'll just sell a $5 call, click continue, and you'll collect $6 every week. Okay, so let's run it back one more time just to make sure you guys understand. We sell the $4.50 put for $18. The stock price falls below 450, we get assigned. 450 is our average cost, but we collected $18 on the put. Now we're going to go ahead and every week we're going to sell calls. And we're going to go 50 cents to $1 above the strike. So right now, let's say it's at 440. Every week, we're going to sell the $5 call for $6. We're going to do that 4 times a month, which is $24. And in 4 months, that's $98. So now we bust out our calculator. We've collected $98 over 4 months, plus $18 is $116. We got in the stock for $450. Take away the $18 put. Take away the $98 in calls. Our average cost is $334 or $3.34 a share. However, in 4 months, if NIO's at $6, that means we are now up $266. That's like a 40% return in 4 months, 10% per month with a very safe strategy. That right there is 120% return per year. You're more than doubling your money. Almost 1.5 times in your money every year with a very safe strategy. And if NIO goes up any more and it starts to be very bullish, then you could double or triple your money. And if you're selling a $5 call and NIO's going up, you can just roll it out a week or two and up to $6. You just keep rolling and rolling. And this is how you make money. And it all starts in one spot. Selling puts. All right, guys, if you want to know how to manage a put, I'm going to show you how to do that. I sold a put on Upstart. So here we go. Simulate my returns. Right now, I'm in the negative $20 because it's a $26 put on Upstart and the price is at $25.33. So you can see that no matter how low this goes, you just get assigned at $26. If it goes above 26, even at 26.01, you can see that's go below actually. You can see max profit expires worthless. You see the 0 over here. I get to keep my full $71 premium. However, because I collected $71 for selling the put, many people ask this question. If Upstart was to drop to $25.80, I would still have $51 profit at expiration. Because 71 off of 2,600 is 2,529. And since it's 2,580 or 2,580, there are some profits to still be made. So if you want to know how to roll, this is on Upstart, but we're talking about NIO. That's what I showed you the example. But this video is not about NIO. This video is about selling puts. So what we're going to do is we're going to go to roll this position. So let's say I want to roll this position out further. You're not going to get assigned if there's extrinsic value. For example, the stock price right now is at $25.33. The difference of $26, the strike price of the put, and $25.33 is $67, but it's worth $91. So the extrinsic value is $24. So as long as there's extrinsic value, it's not going to get assigned. So once this extrinsic value comes down to 70, which means it only has a $3 value or a $2 value, I'll roll it. And what will happen is I will go out one more week, $26, click roll, and I will collect another $48 to $50. Buy to close, sell to open, the difference, net credit, I'll bump it to 50. I'm going to collect another $50. And even though Upstart is going to be below the strike price, even if next week it's at 24, I'll roll another 26. And I'll keep rolling them until Upstart goes back to the $25, $50, $26 area. And I'll let myself get assigned. And if I get assigned at $25.80 on a 26 put, but I've collected 3-4 weeks of premium, I'm already up $300 in premium almost, which means my break even's $2,300 and I'm getting assigned at $2,600. I'm already going to be $300 in the positive before I even get assigned. It's just raining money everywhere. It's just so crazy because I can roll this option for another week, which gives me a value of $170. You see, review order, I'm getting $50. It's $170 put. Right now, we're only $67 below. So there's $103 of extrinsic value. No one's going to assign that. I can ride that for the next week and I can roll the put again. I can legitimately, in the next 2 months, I could collect $600 in put value, even if the price stays between 24 and 25. By the time it's all said and done, I'm going to get into Upstart for around 2,100, no matter where it's at. Because I'm just going to keep rolling and rolling and rolling for premium. It is a really great strategy. To give you guys one more example and why I love selling puts so much. Let's say I don't want to do anything for the rest of the month. Just going to go to May 26th. I don't believe Upstart is going to go down below $25 really consistently at all. I think it's going to come back to 26, but I think 24, 25 is rock bottom. So we'll sell the put. At the end of the month, $26. Heck, we could even sell 25. That would allow me to collect another $60 to $70 juicy premium. So at this point, I'm 130 in the positive. If I get assigned at 25 and the price goes below 25, then I'm going to be break even at 23.70. As long as the price is above 23.70, I'm in the positive. I can also sell the 26 put again because I believe the price is going to stay around 25. This gives me another $120 in premium. Could probably squeeze out 125. This puts me at $195 by the end of the month. So as long as the price stays above 24, it's all profit for me. Then I can do what we already know I'm going to do, which is collect more juicy premium by selling covered calls. And I'll show you that right now. I can go over here, April 12th, and I can sell a $27 call next week. Probably want to sell $26.50. Bam. I can always roll. $75 a week in premium. We want to go up to $27 and get the 29 delta. It's a little bit safer. I'd recommend that. Can collect $55 a week. And so if I get in 200 in the positive by the end of April, then I can make another 200 by the end of May. In 2 months, I've made $400 on $2,000. So you see, first month selling puts, second month selling calls to get out, the wheel strategy, which I'll talk about in a separate video. But you guys can see why selling puts is so amazing. So you can see why selling puts is a very consistent and safe strategy that you need to implement into your portfolio. Thank you so much for being here, guys. If you enjoyed the video, be sure to subscribe, tap the bell so you know when I post new videos, and give me a thumbs up if you enjoyed it. If you have any questions, be sure to leave them below, and I do my best to answer everybody's questions. I will see you guys on the next video, and remember, let's grow our wealth together. Take care, guys.